Welcome to the lounge, and starting with the S&P 500 here. This band that we've got here is the 50-60% retracement level from the top to the bottom. So that's if that ever became the support, well then the market would be quite bullish at that point. But we're not there, we're at resistance, and there's obviously a couple of things going on. This particular pattern that we're looking at here, that I've got as an A and a B and a C wave here for the B wave, so an A wave here, a B wave here, and then looking for a C wave down here for the bearish count. Now I've got bullish counts and I've got bearish counts, and I'm kind of torn in between both of them really. There's good cases for being bearish, especially when you look at well, the Russell to start with. The banks are another one. And then in the short term here, we've got obviously the debt ceiling. The kids are still spending more than they're making, and that issue needs to unfold. So that's just going to create volatility up until whenever it is, June, whenever, beginning of June. So, you know, we're in a bit of a rock and a hard place. We're at resistance here. The pattern here can be countered in different ways. It can be countered bullish as well. I thought one way of actually sort of cleaning this up a little bit, this October low here on the October the 13th, if we take a look at one of the markets that have seen a lot of volume come into it here. This is old Bertie here, and October the 13th, roughly speaking, we've got a situation here where we've got a nice 1, 2, 3, 4, 5 waves down here for the A wave, and then we've got a B wave, and then we've got a C wave here. Now, to me, this particular move makes the whole move down, you know, corrective, bullish corrective. But at the same time, things can expand. You know, what can happen is that we could put the C wave over here. We could have an ABC down here for this. We could put the B wave over here. So we could have this move up here as an A wave, a B wave, and then a C wave here, because we've got a nice little 1, 2, 3, 4, and 5 here. And so this impulse wave here really sort of helps sort out a little bit all of this particular move here, you know, in a way, kind of sorts it out and leaves the B wave over here. And also too, you see how I've got this, the DAX has done the same thing here as well. So I've got this as a triangle pattern through here. It's possible to put it here as well and get away with it, but going back over here, and I've looked at different markets, and I kind of heard things together and come up with some consensus. So I think this is the best count as 1, 2, 3 here, A, B, C, D, E over here for this. So this consolidation in here, when we look at that again on Berkshire here, you can see that that's the top over here, and then we come all the way over here. So it's a typical wave 4 that's complicated, isn't it? Wave 2 was simple and sharp, and this one was sideways and complicated. So this is also from the same low here as well, roughly speaking, around the March area there. So if we come back over here, it's roughly not the same, but a couple of sessions out. This has got futures market pricing in it, but basically all of this particular move here counts quite nicely when we can sort of compare it to other markets around the traps. But I'm just using this one here. There are other examples as well. You know, so basically here we've got 1, 2, 3, 4, 5. It's beautiful here. So the question comes at this particular point is that, you know, we don't have to choose a side. I mean, that can be dangerous, you know. So we can look at this, but what we know is that this move here is a corrective pattern. So I'm thinking that, well, if that's a corrective pattern, at some time in the future, that top's going to get played out here. Now, the question is the ABC pattern going to just sit in here like this, and then we could go up here for 1 and 2, And then if we were going to look at this as 5 waves, then we would look at this as 1 and 2 in here. We could talk about that 3, 4, 5 up here to make the wave 3, and the 4 over here and the 5 over here. So that would be the bullish pattern here. You know, we are seeing this move down here on lower volume. I mean, it's still very high volume, but it is lower volume. So corrections are on lower volume. So we're not seeing increasing volume in this particular market anyway. So one would think that, well, if it was going to be a wave 2, that looks pretty sharp there. That's probably 5 waves. And in a lot of markets around the world, this can be counted as 5 waves. In a lot of cases, it can be counted as 3 waves as well. But let's just assume for a moment that it is 5 waves down. Well, then we'll get an ABC here for wave 2, and then we'll be up at that point. But at the same time, if it is 5 waves here, then we also got to be careful that we could have this over here for this. So we'd have this, the A wave here, and then an A, B, and C here. And then, actually come down from this point, So that's what we're up against, basically. So do I have an answer? I don't have an answer, because I can see that some markets, the Australian market, the Ftse, the Russell, they're all in a weak situation. And and there's cases for strong markets as well. There's money going into value stocks like this with volume, and, also into, bigger tech stocks with branding and all the rest of it. I mean, are we bearish or are we bullish? I don't know. We just need to sort of gather more information. There's some markets that are still going up, like the Nasdaq, and there's some markets under pressure, like the S&P and this one that we're looking at here at the moment. And the weaker markets, like the Russell and so on, they're moving into even weaker positions at that point. So anyway, I just thought this was a very simple way of viewing the situation and presenting the problem of it's okay not to know, I believe, for myself. That's a position. My indecision is final. So so that's the situation, really. So we just need to gather more information. So the S&P, this wave 1 up here, and coming back for wave 2 here, that would be an S&P 500 issue as well. So that said, we could look at the S&P 500 here. We could look at this 5-wave structure up here as 5 waves, as wave 1, and we could look at wave 2 here coming back. So wave 2, the 50% would be around the 4,000, but there's plenty of support here, so it might just come down to the 30, 40, 50, whatever. I'm not how these are spiked down. So we could look at these as we're not really getting a nice 5 waves down here, by the way, but we could. This is rather high for, if we look at that as 1 and 2 and 3 here, we could look at it as wave 4, but it has moved up like 60% rather than 40%, but it hasn't overlapped wave 1, so we could look at it as wave 4 and have wave 5 here. We could also look at it as a B wave and try to squeeze 5 waves into this move here. There's a few things that we could do, but in a nutshell, if we're patient enough, it will come out in the wash, and we'll see some sort of move like this here. If it is a bearish move here, then we'll take out these lows here and we'll be down here somewhere. That's the gist of it all. So for me to turn bearish, what I would need to see, for some of these stronger markets, I would need to see from the top here, not this first little move here that could be Arthur Martha, it could be corrective, it could be impulsive. I would need to see a nice, clean 5-wave structure here, and then we don't need to chase it because we'll get the counter trend rally, and then we can short it from here and then go down at that point. So this tells me if we get 5 waves here, then we'll get another 5 waves over here. So I don't think that any of us should really sort of fuss around too much until they do the debt ceiling thing and so on, because I just think that we're going to get more sideways and negative sort of action in a lot of the markets. So yeah, I mean, like I said, we can count this as a bullish count as well. We could look at this as wave 1 and 2 here and so on. So let me just go to the bullish count. I think we can sit on here. So what's this here? Okay, so this is what I was kind of talking about here. So We can look at it as 1 and A and B, C for 2 here. We could look at this as, if we were looking at Berkshire Hathaway, we could have this as wave 1 up here and wave 2 here. That kind of fits. We would have to sort of squash and squeeze and, make all that work down here. But I can see that it's doable, but obviously it will create a lot of tension between the Elliott wave gang, so to speak. Do we get some sort of A wave, B wave, and C wave here? Is that the go? Like I said, if we get 5 waves down, well, then we'll look at that. But if we just get the 3 waves down here, then we can look at it. I mean, in here so far, I'm trying to get 5 waves out of this, but it counts better as 3 waves here, because a wave 2 is normally 5, 3, 5 here. So this move up here as a wave 4 hasn't really overlapped wave 1 here yet. So it's possible to have that down as wave 1 here. Now, a wave 1 or the A wave, and then we have the B wave, and then we have the C wave, and so on, that type of thing. So I just think we need to chill on this at the moment, really. There's nothing really to be sort of had here. If we go back to the bearish count, but on the 50k, and then we'll go to 1k, this would be what the bearish count would look like. We need to kind of figure out, do we have wave 1 here or wave 1 over here for this? Because, I look at this here and there's just 5, there's 1 and 2 and 3 here. 4 and 5, is that how it's going to play out? As I said yesterday, we just need this to land because if we're going to go short, we need the 5 waves down here, and then we can short under here for that. That's what we can do. But it's on good support at the moment. 1 is the strongest number in the market, the 100, so it's a minor level there. We've got good support on that so far. Even if this did come down here, there's no point in shorting it because there's so much support in here anyway. It's going to bounce back again. So that's kind of the price action we're going to get. So if I just go into here on the 1000 tick chart here, this is 1000 tick. So yeah, and we can go to 100 as well. So yeah, I wouldn't worry about this being bearish or bullish at this point. So we can count down here as 1, 2, 3, 4, 5 here. Then we've got some sort of A, B, C pattern up here. You could probably label that different, but it doesn't matter. That's the high. So we've got an A and a B, or 1 and 2. And then here, that's 5. This one's 5, and this one's 5. So I'm only getting 3 waves down here. So wave 3 here, if I was going 1, 2, 3 here. And then yesterday, we're looking for this to land and then look for wave 4 that would pull back to this wave 4 of 1 less a degree here. But it actually has gone a little bit higher. So do we put wave 4 up here? Or do we look at it as an A, B, C down here for an A wave here? I mean, if really as an A and a B and a C wave here, that could be the low in here, and the market could go up from this point. That's what could happen, Friday's got, in a bullish market, Friday's got a habit of being bullish. So if it's not bullish on the Friday, then we've probably got a change in trend and we'll be heading down further. So I don't know if to put wave 4 up here. It's such an extreme thing to do. I can count this as 1 and 2 here, then 1, 2, 3, 4, 5 here for the 3rd, the 4th here, and then the 5th here. You could probably count that in a different way, but you'd still end up here with an A wave or a W. And this would be an X, which you could put here, or you could look at this as 5 waves down for here, an A and a B and a C up here, but there's only 3 waves here, so it kind of got to go over here. So then how do you count this here? We're at the 56, we've hit the 61.8% mark at this stage, so it can drop from this point. That's the target area we're looking for a B wave, not the wave 4. So there's a few things going on here with this. I can go into the 100 tick chart, but I won't really worry about it. I'm suggesting that we don't do anything really here at the moment because it's just not clear in terms of the structure at this point in time. And when we have a look at the Nasdaq is the strongest market out there. So where are we here on 20k ticks here? So yeah, I just see it going up further. That's how I see it. And even all going up here, speaking all this week here, as I mentioned, this trend is not finished. If we go out a little bit, I've got it counted in a couple of different ways. So if I just reduce that as 20,000 ticks, so that's just go to the daily chart maybe. something like that. Okay, so in this instance here, we've got the move down from the top here. This is the 50-60%. So you'd think if it was going to fail, it's going to fail, you know, in that box. The bottom is the 50% and the top is the 62% roughly. And sure, look, it could go to 78.6. It could, you know, touch the 15 and do all sorts of things. So, but the question to ask is, you know, is it bullish or is it bearish? Now, once again here, a bit like when we're talking about Berkshire Hathaway, the move down through here, it doesn't really count as 5 waves here because it's got overlapping wave structures if you're going to count that, because this one here overlaps with this first 1, 2, 3, 4, 5 down here. So as 1 and 2 here, then if this coming back up as a 4 here, it's just overlapping here. So it really makes all this is corrective as well, but it's how you label it that's, you know, that's the trick here. And first of all, you know, do we, because we could look at this the same as an A and a B and a C down here and be done with it. We just can cruise it to the top here. You know, there are stocks out there that are testing highs and taking them out, and other ones that are down low here. There's a whole mixed bag of things. So we could count this as the A, B, and C and have the low in here. Or we could count it as an ABC here and then an ABC back up here somewhere and then come down at that point. That's the other problem with this. So it is a bit of a dilemma. Then it's like, well, you know, counting this up here, if we take it from the low here, if we look at this as the A wave, the B wave here, and then the C wave up here, I'm finding the C wave a little bit long compared to wave A. There's no sort of I mean, I could get a relationship out of it, but not the kind of one I'm looking for. The other way I could go here is I could put this as wave 3 here and 4 here and have this as 1, 2, 3, 4, and 5. But how are we going with that really? So if I just take the length of that to there, I would need because that's shorter than that one, I would need that one shorter than that. That's doable. We could do that. We could have wave 5 finishing down in here somewhere. Wave 3, 4 here, a bit of overlap in here, and then 1, 2, 3 sort of finish up here a little bit somewhere, you know, make it finish up here right on the 61.8%. We could jam that in there. But this move, you see how it's kind of expanding out here? It's kind of behaving like a third wave, you know, like this third wave here. So having this as 1 and 2 and 3 and 4 in here and 5 and pushing this up here higher is kind of the thing to do. And then again, if it's going to be bullish, do we look at this as 1 and 2 here, you know? As I mentioned the other day, we could also put wave A over here as well, but that sort of, it works. There's so many different ways to look at it. I always, when I get in, it's not like we're in a bull market at the moment, and we are in a bullish trend, don't get me wrong, but we're still there's still a relationship with this move here. So look, we just need to be careful, that's all. You know, we're in a big corrective pattern, you know, and we need to be, you know, mindful of certain things. Now I can shorten this up here, so if I go to the 20K tick where we just had that there, that would leave us with a situation where now we're hitting the 14,000 here. So look, it's a big number. It's got you know, it's got some, you know, plenty of zeros on the end there. So, you know, and this little trend here has got a beginning, a middle, and an end here. So it's not going anywhere. It's just going to sort of fluff around here and pull back and do a dance. We'll just keep a bit of an eye on it. But as far as this count goes, we can look at it as, you know, wave 4 coming back into this space, then wave 5, and then wave 4 here, classic trading levels pattern, and then pushing up here further and finishing off up here. That would be, to me, that seems to be, you know, about right. But the rest of the markets are not going to come with that. So we either need to see this market just sort of crash out, or I could shorten this. I could probably shorten it down to here, as I mentioned, you know, so I'll just see. But all I can do is that I will not turn bearish on the Nasdaq while I'm seeing corrective waves to the downside and impulse waves to the upside. There's no point in changing trend. There's no point. That's the evidence, you know. No point to be emotional about it. So there's nothing really to do today in the next session, because really, you know, the swing range for this market would be the 14 thousand, and that would be group 1 above and group 2 below. So that's pretty much what's going to happen in here, even if it's going to be bullish here. So this is a perfect kind of fit up until June, until they sort things out a little bit as well. And there's been a lot of money going into the tech stocks, as you know, but it gets a point when, like, everybody's in there, then who else is going to come in, you know? So that will be this sort of part over here with that. But yeah, so and to shorten this up a little bit, if I just go to the 5,000 ticks here, this would be shorting it up a little bit. So yesterday we were looking down here for the ABC pattern. Some markets have got 5 waves down here for this as well. So let me just yeah, so basically this would be a shorter way to have a top here. This would be wave 3, 4, and 5 here, that type of thing. But there's pointless trading around large numbers. You just no point. Okay, let's move on. Pull that to the side, and the Russell. So now the Russell is one of the weakest. So it's weak because this whole pattern down here is corrective and will make a new low below here somewhere. The question though is can we look at all of this as a wave 4, or do I need to look at it as a wave 1 with an A and a B and a C wave up here for wave 2 top? And then we're looking for a move down here. I haven't actually done all my homework on this particular trend here for this, so there may be another low to come in here. Let me just, I was just looking for, what I was looking for was wave 1 low to come in here, and then have a look at some sort of, you know, corrective bounce here. That's what I was looking for, was the trade set up to short, and then we can, there's lots of different ways we can look to short under here. But it does look like sort of wave 4s in this point here. I won't worry about it today because I've got a lot to get through, but any shorting that you do in here at this point here is going to see the market bounce back. So we're really just looking for this wave 1 low to come into play. So there may be another low in here for this. You know, that wave 4 could go here, and this could go here, and this could be 1, 2, 3, 4, 5 to come into play here. So I do want this trend corrected before we look for a short trade in here. But if you can spend some time and pull that apart, then you'll know where you are at that stage. And the European markets, the DAX here. So with the DAX here, yesterday we're looking at this, and we've got 5 waves down from the top here. This has got the same wave 4 triangle pattern as the Sp 500 from that particular date, slightly different date, the same as Berkshire Hathaway, and that they're all, anything that looks like this will be the same. So in this case here, we've got this is 5 waves down, and it's hit support now. So that means that there may be another little low in here, but the support definitely coming in. We can see the stochastic sort of doing its little thing. So at some point, we'll be looking for a little ABC pattern to come into play, and then that's going to create the short trade at that point. But because if we have 5 waves here, and we'll double check on that later, and yeah, that means that we can short the right at the 50-60% up here as well for that. So there's a bigger picture opening up for the DAX, because we're looking at all of this being wave 1 up here, and then pulling back for wave 2 at this point. We could also have the top here as wave C of B as well, and come all the way down through to here. We know that the financial figures, you know, their growth was on the GDP was like 0.4 or something. You know, in fact, they're called, you know, some of the bigger banks are calling themselves, they have even though the stock price is up like this, all the data's saying to them that they're in recession. So, you know, is that going to expose itself at this top here? There's always a story for the top, and that 0.4 from that GDP is pretty much a good story. What we want as traders, though, is we want this move down here to be 5 waves, and then we're going to look for that counter trend. So we've got some time here, and we'll look into that as it plays out. So, yeah, so the other markets, the Ftse and the Australian market have got the same patterns. They've had this move down, they've had this move across here. And once again, we've been talking about the Australian market and the English market completing down the bottom here. If you're short here from this point here, I was going to remove that. You need to get out at this point. So we're going to be looking for a corrective rally here. Now, all of this here, we could view all of this here as some sort of A wave, B wave, and C wave down here, and that's the end of it, and we go up at that point. We're in this box here, we're in the 50-60%, so that's all doable at this stage. But what we're looking for, we're also being mindful of the bearish situation as well. Now, if you see Friday being strong for the very short-term traders, by all means, go long. But if you're going to go long, always gravitate over to the closest largest number. So the 76 here, and you want the 76 as a classic trading levels pattern at that point. It does appear that we've got the first little 5 waves up here. It's looking good, but I would use this number here and look for this particular pattern here. So if that's 76 across here, you want the arrival, the reaction, the first high above the level. Once you got that there, don't go chasing that up there. It'll fall back. And start from the top. Second one, you need some high to get taken out. You need you want the market to prove to you that it's strong. And taking out a new high after a retest of a large number, that's pretty good. Because if it was going to fail, it would fail at retesting this number, you know. So yeah, I think this is and it looks like we've got, what have we got here? Oh no, we can have one more low here too, by the way. That's probably from wave 4 here is 1 and 2, 1, 2, 3, 4, 5, the third wave. So yeah, we probably got one more low to come in here. So if we just put that here and 1, 2, 3. So you can stay in here a little bit longer. This will be wave 4 coming back to wave 4, getting overlap here now too. This wave 4 is overlapping wave 1. So it's you say, oh, but that breaks the rules, Pete. Sure, but I mean, the way that I also view it is that if that's coming up here and overlapping that means there must be strength coming into the market. Do you know what I mean? So that's I think that's more important. But we could get one more low to come in here for this. Okay, so, you know, as I mentioned yesterday with this market and the Australian market, what we want is we want some sort of A, B, C pattern here. We can go short under the B. This will be a 5-3-5 structure here. Once we've got that here, we understand the market can continue up, but if we get a nice impulse wave down, right, then we can also get a little ABC pattern here, and then we can add to we can start the shorts from that point, you know, and then we'll have 5 waves down here, and then we'll come back up again, and then we can add to here, and then down again, and all that sort of stuff. So we'll continue to work that, but we're just not there yet. Do you know what I mean? You know, getting in at the end of a trend is just not the right thing to do, really. It's always choppy, you know, because it always creeps along, so it's just yeah, that's for the newbies. You're old and crusty like me now, so you need to do the right thing at the right time. Still make mistakes, but there's always room for improvement too, my wife says. So the Australian market's the same. So this particular pattern we've seen on the Ftse here coming down, and this sideways pattern here and this coming down is the same for the Australian market. So it's all of this and then down here. So yeah, once again here, I mean, this is the bullish pattern. So we could look at this here. We could look at it both sides. because we don't have a clear global picture of where the markets are moving to. You know, that's the thing. So this is just the bullish picture here with 1 and 2, and 1 and an A and a B and a C for wave 2, and we could go up at that point. If we were going to go up, then we would want to see if we looked at this top here to this bottom here, if it was going to be bearish, right, then the market would come up. If we could just take this for a moment, we would look at this here. That would be we'll put that in here as a 50-60% retracement level at that point. So if there'd probably be a different wave 1, but if we got 5 waves to that point, then I would be bullish at that point, because 5 waves to the 61.8% would tell me that we're going to get a correction, and then we're going to get another 5 waves up. So that would take it too high at that point for it to be bearish. So it will probably be a smaller wave 1 here, and so on. But that would be our long trade at that point. That's where we would go long from, if we can clearly identify 5 waves at that point. However, if we were looking to be bearish, well, we would be looking for 3 waves to the 61.8%, and we'll be looking to short under here for that. So we're just waiting for it to work into a corner. And yeah, anyway, that's the bullish case at this point. So I'll just clean this up, and we'll just go and have a look at the bearish side of the market at this point. The bearish is on the 50K, so go there. So the bearish side is this here. Now, we've got 2 bearish patterns here for this particular market, because this is really, you know, is influenced a lot by the financial sector. And when we look at the financial sector, the banking sector, or the financial sector, or the banks, and you have a look at it on a weekly or monthly basis chart, you'll see that we're in this massive triangle. So that means that, you know, we could be in a series of 3 waves moving sort of sideways through all of this, and slightly down as well. So an A wave, a B wave, and a C wave here, and then another A, B, C pattern. So it's not as easy. I've got to kind of like think of, as you know, everything within reason. So I'm running 2 bearish patterns here, but in the meantime, we can view this as wave 1 with an ABC for wave 2 here, then down for 1 and back for 2, and then this 3rd wave down. That's the one we're looking for, because if we're going to be if this is going to be bearish, this move here is going to be quite fast coming down here, and we'll probably take it to these lows here at that point. So this leg here, if it's going to happen, is the one that we want. We know, we can see the stochastics at the moment, it's oversold and needs to pop back up. So the stochastics are kind of interesting to me, because the speed in which it's the speed in which it moves up here. If this moves up slowly into wave 2, and this one here moves up really fast, then I know that we've got a short trade coming. You know, if this moves up really slower than the price, then I know it's bullish at that point. So it's the speed of it, you know, more so than anything else. George Lane created that, and he was an Elliott wave trader too. Traded the Sp 500. He passed away a good 25 years ago now, I think, or 20. I can't remember. Time flies when you get old. So anyway, enough waffling. Let's just go in and check on this on 1,000 ticks, I think. So I think this is basically where we were yesterday looking at this here, and we were saying that I was mentioning that we need the 5 waves down here, because we're in here somewhere or something. So we're getting this bounce off here. Probably need to do a little bit of work on this here. It's possible that this, especially if the S&P has got that thing, we could just come to here and have one more leg down as well at that point. But what I want to see is I want to see a nice clean corrective move here. That's what we want to see, you know, so we've got something reasonable here. I'm just going to go to, it's possible that, I mean, see, wave 2 was complicated, so wave 4 could be simple. But I've got to check this here. It's just not, doesn't look quite right here. And I think I had a quick look at it on the 100 here. So just bear with me a second so I can just get in here and have a look. So, so we've got wave 1 and 2, and that's 1, 2, 3, 4, 5, or 1, 2, 1, 2. This is where it can get a little bit tricky in here. That's wave 4 in here, so that's got to be wave 2, the third wave in here. So we're not far off. That would be right here. That's not right here. That's 1, 2, 3 to here. We don't really, well, I could go to there, use that, looks about right. I could go to here. And then the A, B, C to here, 1, 2, 3, 4, 5, that works. This is also a little bit tricky, 1 and 2, and 1, 2, 1, 2, 3, 4, 5. So 1, 2, 3, 4, 5, that's okay. Not the best looking 5 waves here as well. A, B, C for 4. But we could have a low in here. It'll just be interesting to see. And we're looking like, it's looking a bit like an impulse wave to the upside. But we kind of want to get up there a little bit further. But see, the problem is that sometimes as a wave 1, oops, not this wave 1, sorry. As a wave 1 and 2, the wave 2 can just sort of pull back to the wave 4 here. So we need to be a little bit careful about that. That will be the 38.2%, and this will be 50-60% is up here. The 72 is the most important number in all of this. So when we go back to 50K, you'll see that. That's the 72 here. So you can see it kind of even more so over here with this support in here and here. So that's what I'd be sort of, we want to, you know, we can be long above that. If we get a classic trading levels pattern on that 72, we could be long, but otherwise we're just kind of, you know, as a wave 2, that would come back up and hit wave 4 there and do this and then do that and then come down at that point. It'll be something like that, because obviously that's the 72 is where the supply starts. So as I mentioned yesterday, yeah, we just look for that, you know, that low to come in there at that point. So where are we now? Just go back to that 1000. Yeah, so that 72 is, you know, you can see that it's kind of important. So that's really where we want to short from. I'm just a little bit, I think that's okay at that point. Let's just see what the market does at this point. You know, if I've messed up and Friday's going to be really bearish, let's just say that I made a total ass of myself again, we would come down here, we would bounce off the 100 because 1's the strongest number, and then we would come down through it, and then we would come back and probably try to get above it in some way or another, and then it would drop. So then, you know, that second low here or this low here, that's where you could go short from. If it was going to, because sometimes the market just continues to cascade down, you know. So then you just need to really sort of work it from the best way you can. And yeah, it's not a lot because it'll just come down to here and it'll bounce back at that point. So you could probably get group 2 under here, you know. So group 2 would be 80, and then 72 in here, of course, and 65 in here. If that became the retested resistance here, 65. If that became the retested resistance, you know that it's going to drop down here at that point. You know it's leaving the 100 at that point, so that's kind of valuable. Alrighty, I'm going to leave it all at that, and yeah, all good. Okay, cheers.